Look at this massive 200% upward price surge that played out over just the past 7 days. Despite moving that fast, almost nobody in the retail space is talking about the token behind it yet. If you are looking at a setup like this, you face a very specific problem. You have to figure out if you're catching the beginning of a massive narrative run, or if you're just lining up to be the exit liquidity for early buyers. That answer depends entirely on whether you approach the market as a short-term momentum trader or a fundamental long-term holder. Because if you blindly chase these green candles without understanding exactly how the underlying token supply is structured, losing your capital is a mathematical certainty. The project is Bitway, a Layer 1 protocol built specifically for Bitcoin decentralized finance. The pitch is simple. You get to interact with DeFi without ever leaving your native Bitcoin wallet. On the right side of this matrix, you can see how Bitway actually works. Instead of your Bitcoin sitting idle, you use it as collateral to access lending markets, generate yield, and buy into tokenized real-world assets like bonds. The main benefit for users is that they bypass the severe security risks and complexities of wrapping their Bitcoin and bridging it to another network. But you are making a trade-off. You avoid bridging risks, but you expose your capital to the unproven smart contract vulnerabilities of a brand new Layer 1 protocol. To their credit, this isn't vaporware. They have 75,000 active monthly users, and they carry deep credibility markers, specifically backing from YZi Labs, formerly Binance Labs. That institutional backing validates the technology, but it creates another trade-off. It guarantees that early venture capitalists are holding massive token allocations, bought at fractions of a cent. The technology works and the user base is real, but the heavy venture capital presence introduces a hidden cost to the system, and eventually, retail buyers are the ones who pay it. This chart shows exactly what that hidden cost looks like. This circle represents Bitway's total supply of 10 billion BTW tokens, but right now, only this 22% sliver is actually circulating in the market. Because the circulating supply is so small, the current market cap sits relatively low, at roughly $88 million. This extremely low initial float creates the perfect environment for short-term price manipulation, where even a little bit of volume causes explosive price pumps. But the actual threat is the massive 78% of the supply that is currently locked out of circulation. Over the next 4 years, those locked tokens are scheduled to hit the market, creating a catastrophic inflation overhang that constantly dilutes the circulating supply. And as of right now, the team hasn't confirmed any token burn mechanism that could offset that impending flood of supply. If you buy and hold this token today, you are structurally positioned to absorb the sell pressure of early investors cashing out their massive holdings. You can see this tension between short-term momentum and incoming inflation playing out live on this dual-axis chart. Driven by cautious optimism, the token is currently trading up around 3.9 cents. The bullish scenario here is clear. If buyers push this past the all-time high of 4.6 cents, it enters pure price discovery. A clean break above that resistance triggers serious upward momentum. But if it faces rejection at that 4.6 cent ceiling, late buyers get trapped holding the bags exactly as those locked tokens begin to unlock. The short-term excitement of the crowded Bitcoin DeFi narrative is fighting directly against the long-term gravity of that supply dilution. The current price action is a high-stakes, asymmetric risk setup. At this point, your exact entry and exit timing matter far more than the technology itself. This decision tree breaks down exactly who should buy this token, based on the trade-offs between utility and inflation. Following the momentum trader path down the left side, the immediate target is waiting for that clean break above 4.6 cents. Active traders can use this asset to capture immediate upside while the BTCFi narrative remains crowded. But executing requires intense daily chart monitoring and strict stop losses to survive heavy volatility. For the active trader path, this is a firm watch. Shifting to the long-term holder path on the right, we run straight into that 78% supply unlock. If you attempt to hold this purely for its technological utility, you are volunteering to act as daily exit liquidity for a 4-year venture capital vesting schedule. For the long-term holder path, this is an absolute avoid. Bitway works incredibly well as a short-term volatility tool for active trading, but the inflation math makes it a structurally toxic asset for long-term holding. If you have the active trading strategy required for this, you can pick up BTW on Binance and MEXC, or over on PancakeSwap if you operate on the BNB chain. If you found this helpful, smash that like button, subscribe for daily crypto breakdowns, and share this with someone who needs to see it. Drop your thoughts in the comments. Are you bullish or bearish on this one? This evaluation is not financial advice. Always verify the math and do your own research before you risk your capital.